We're here on the euro yen. I've just got involved. We actually have a higher time frame triangle and we've just broken out of it on the 60-minute, and I've dropped to the 5 range because we've broken out with a lot of force here, and when that happens we typically carry on the momentum. So we've had a little pullback here, a lower low, and I've used this structure level here as the entry. So let's just go out and do the higher time frame analysis, delete everything off and take a look at this. Soon as I can do, I will be moving to break even. Sorry, just monitoring another trade. It's just about to hit. Bring this thing over. Just take a peek at this euro dollar pushing down eventually. I talked about this trade last night in one of the videos I released, and we are now pushing down towards those targets. So I'm just keeping an eye on that. Anyway, let's talk about the euro yen. Here on the dailies, structure level in at our lows. Man, it's been a good couple of weeks trading. Really expecting a big drawdown soon. I've had 2 weeks of real quality stuff. Anyway, here we are at this structure level. We're either going to see a rejection or a continuation. Now, I'm betting on the continuation. The reason for that is because, and again, I did talk about this in the review video last night, rejection candle. We've come down and held structure. We've come down, and this candle right here is an inverted hammer. Look at all the selling pressure here, and it just kept, we closed at the bottom of this level, an indication here that we tried to push higher but failed. And as we drop down the time frames, we'll actually see our pattern. You can actually see the pattern here on the 240. This is a 240 pattern, so this triangle, we're looking for a saw thumb move. We're also looking for a directional move. And if we put a structure level on across the lows like this on the closes of the candles, sorry, just 1 second, moving to break even on that trade. I'm actually down testing that area now. And then what we do is for the triangle on the closes of the candles, we're looking for the market to consolidate and to coil, should I say, and we're looking for this not to test the closes of the candles. Usually on a pattern this size, we do actually come up for a third test here. We haven't done that, and you can see we're actually breaking out with, well, we can actually see quite a bit of force on the 60, so we'll take a look at that in a moment. Targets are always that 127 extension from our swing low to our swing high. And as usual, let's remove all the other fibs apart from the 127. And we do need to make sure that there is room to go to the downside. And if we look left, here on the 240, the closes of the candles are down here, whereas the dailies are up here. So here on the 240, this is perfectly valid. And what else? Can't take these at psychological numbers. We're not at a psychological number. So dropping to the 60. And you can see then here on the 60 that we have violated the structure lows here with a fair bit of force here. So I'm looking at this continuing, so I can be quite aggressive with the entry. So let's just drop down to the 5. And you can see this little structure shelf here. And as soon as this candle closed here, this big lower, lower, lower closed, I got involved with the trade. Stops just an ATR above the high. Now, really don't use this method quite often, not unless we're really breaking out quite hard or we're heavily in trend. And I do use it on breakout patterns. And the reason for that is because these are called breakout patterns. We do break out with force, and with force we typically move very directionally and usually in trend where we see very small pullbacks. Let's just take a look at the 15. And you can see here on the 15 now we've had another big lower, lower, lower close. So I'm just going to go to the 60 and work out the reward to risk. Stops just went an ATR above the high. So we're looking in terms of risk then. 17, playing for that 127 fib minus how many? 5 pips. So 36 pips of reward, 17 pips of risk, 2 to 1 here. Again, can only use it on really a breakout pattern or when we are moving very directionally. And as soon as we start putting in maybe a few pullbacks here, I'll reduce down the risk or at least certainly move to break even. And we're back for an update on this trade. Currently on the 15, you can see that we're pushing lower. We had this lower low lower close, and we are still pushing lower, but look at what we're doing. We are still moving directionally. I'm just going to go to the 5 range, which is what I've used as the entry. Now, I was quite aggressive here with the entry because I entered once we had violated this level, and then stops went above the high. Now, what you could have done is actually wait for a pullback and then a lower low, lower close. So a pullback would be anywhere in this structure level, and we came back up for a retest and then another lower low, lower close. Let's just go to the 5, take a quick look at this. You can see on the 5, this is where I got involved at that lower low, lower close. You could have waited for a pullback. Here was the other lower low, lower close. So lots and lots of opportunity to get involved, and just look at the momentum that we're still seeing. Once we had a little bit of relief, we're seeing that continuation, which is what's expected. Now the big question is, of course, are we going to continue that momentum and hit targets before we run out of steam and potentially pull back? And that's always the problem with working this halfway through, you know, getting to targets. So that's why I want to move to break even as soon as possible. But for now, I have nowhere to hide stops behind. Stop's still in the most appropriate place. It's just a case of waiting. And we're back for another update. You can see that we're still pushing down here. I'm going to go to the 5 minute. And what we've just done here now is we put in another low, and then we've put in a small structure shelf. So it's not a major structure shelf, so I'm just going to reduce down the risk here on this trade. Just give it a little bit of breathing room. So the risk has been reduced now to just 9 pips. Okay, I've just resumed the video, 32 pips up. We're just about to come and test that take profit line, so I am actually now going to move to a couple of pips past break even here. You can see I'm front running by quite a bit here, by 5 pips before that 127, and we have just closed with a big lower low, lower close candle. We could see a pullback here to this little consolidation area. In fact, I'm actually then going to be a couple of pips back just in case we do that. I don't want to be stopped out, and we'll just wait for this thing to carry on a little bit lower. And we're back for the last part of the video, and just to talk through what happened here, just to let you know as well that I did do another part to this video, but I think I deleted it, so I'm not too sure what I said. I don't really have time to go back and watch the 10-minute video. So we came up to this structure level, 3-bar reversal, stops were still above here, moved to break even, 2 pips behind break even, and we came a couple of pips within targets, and we just failed to get any lower, and then news has come out, or whatever, Brexit news, whatever, made it rally, and it took me out for break even after being 35, 36 pips up, something like that. And what a real stink. I mean, just let's go to the 60. Just look at it. Just look at it. So it hasn't hit, and we have come back to retest our internal structure area. This wick really makes it difficult though to get stops behind if you're looking for another entry reason. But right now I'm out of that. That is the second trade. Yesterday I had the similar trade as this, used the 5 range, aggressive, short because we were moving very directionally, got 65 pips up, 75 pips was the target, and boom, out for break even, just like this one.